generate passive dividend income with high quality dividend growth stocks like Lockheed Martin, Chevron, Pfizer, Coca-Cola, Pepsi, and many more, which are part of the S&P 500 index, but you only buy with one low-cost exchange-traded fund or ETF. No need to spend hours and hours in front of the computer trying to find the best stock. And the cool thing is you can put everything on an autopilot. Watch this video till the end, as I will provide you with 4 bonus ETFs similar to this so that you can research and find the one that suits you. Hello, welcome back. My name is David Das. I'm a retired engineer, an investor, an author, and a YouTuber. My main mission is to educate younger generation about savings and investing based on my limited knowledge and experience. Let me give you some details about the ETF first, then we'll talk about the top 10 reasons to buy this ETF. Today we will talk about Schwab US Dividend Equity ETF with the ticker symbol SCHD. The strategy of the fund is to track the total return of the Dow Jones US Dividend 100 Index. This ETF includes high dividend yielding stocks. So number one, high dividend yielding stocks issued by US companies that have a record of consistently paying dividends, selected for fundamental strength relative to its peers based on financial ratios. Morningstar gave a 4-star rating to this ETF. When I took the screenshot, the share value was $75.81 US, slightly lower than the net asset value of $75.97 USD. The expense ratio is 0.06, which I think is pretty low. It is highly liquid. Average shares traded per day is 3.6 million. 12-month yield is 3.31%. Again, if you are chasing high yield ETF, this ETF is definitely not for you. But you'll be surprised with the total return, which I'm going to explain next. This ETF is more for safety, dividend growth, and consistent income. This ETF is more for safety, dividend growth, and consistent income. The top holdings, as I mentioned before, includes top brands like Lockheed Martin, Chevron, Texas Instruments, Cisco, Verizon, Pepsi, Coca-Cola, Pfizer, and Amgen. This performance chart shows the growth of SCHD over a period of 10 years. If you had invested $10,000 in 2014, it would have grown to $28,646 today. If you look at the total return for the last 10 years, it's an average of 10.81%, which is fairly decent for this ETF in my opinion. Now we will talk about the top 10 reasons to buy this ETF. SCHD is a popular choice for investors seeking exposure to dividend-paying stocks in the US. Here are some of the top reasons why people buy SCHD. Number one is dividend income. SCHD focuses on high-quality dividend-paying stocks, making it attractive for investors seeking a regular income stream. Number two is dividend growth. The ETF includes companies with a history of consistent dividend growth, providing the potential for increasing income over time. Number three is the stability. As I mentioned before, the safety and the stability. Dividend-paying stocks are often more stable, mature companies which can provide some stability to a portfolio, especially during market downturns. The long-term growth. Many dividend-paying companies also offer long-term capital appreciation potential, making SCHD a blend of income and growth. This is very important. It provides a blend of income and growth. It's a low cost. As I mentioned before, SCHD has a relatively low management expense ratio, making it cost-effective compared to actively managed funds. Diversification, obviously. By holding a diversified portfolio of dividend-paying stocks, SCHD helps spread the risk across different sectors and companies. Reinvestment. Investors can choose to reinvest dividends back into the ETF, compounding the returns over time. Passive investing. SCHD is an ETF, so it can be bought and sold like a stock, providing the benefits of passive investing with the liquidity of a stock. Quality selection. The ETF selection methodology, as I mentioned before, focuses on quality metrics like return on equity and cash flow to identify strong companies. And number 10, low volatility. Dividend paying stocks often exhibit lower volatility compared to non-dividend paying stocks, which can be appealing to some investors. These factors make SCHD a popular choice for income-oriented investors looking for a mix of dividend income, potential growth, and stability in their portfolios. Now I'm going to present 4 bonus ETFs which are something similar to this and which I'm going to present in the next few slides. Thanks for watching. If you found this video helpful, please like, share, and subscribe for more investment tips and insights. And I'll see you next time.